Okay, all right. Vivek Paul is now joining us, Head of Portfolio Research at BlackRock Investment Institute. He's joining us now from our studios here. Vivek, great to have you with us here. Thank you very much for your time. Appreciate it. Let's just, of course, start with this entire AI-led sell-off and the rebound that we had last night. What do you make of it? You think, do we know enough now? I think people are just scrambling and figuring out whether this is really going to disrupt all this AI spending in the US on the back of which stocks have been doing well. Or not really? What's your sense?
Well, look, firstly, thank you for having me on. Great to be here. I think in periods like this, when there's just enormous market reactions and lots of speculation, we've really got to examine what do we really know? What do we actually know? And I think what we've learned is that it appears that the deep-sea kind of technology has made some material advancements in efficiency. Right? So it appears that there are some of those techniques that kind of can save something in the order of 97% of the training costs relative to the legacy approaches. That is a big deal. So full stop, we know that. The implications of that, if we zoom out, there has to be something that accelerates the AI transformation more broadly. So we've been talking about this idea that this AI transformation is going to change markets. It's one of the structural megaforces that does that. And a way of looking at this is imagine if all of those legacy chips got 10 times more efficient. I mean, this is a big deal. What this means, I think, is that effectively we are going to have greater adoption. We're going to see more of those next phase winners come early, and I think that has to be the overall reaction. Now, that wasn't what markets appeared to react to immediately on the Monday. I think the point there was the market seemed to be reacting to the idea that perhaps as a result of the greater efficiency, some of the legacy infrastructure build out in the space was perhaps wasted money. I think it's way too early to make that call. I think if we were at a steady state adoption already of AI, then maybe the idea of greater efficiency
you're saying we're early in the cycle, so there are lots of use cases, and so I mean it's not. We can't conclude right now, right away.
Exactly. I don't think it's a cyclical
we
dynamic.
won't see tech companies and they all report tonight. We won't see them scale back any of the capex, etc.
Well, I think the point here would be it's going to be crucial to understand the kind of the commentary they give around those numbers, right? How are they going to react to this? And I don't think we can kind of sort of expect one thing or another right now. My point would be that in terms of the broader AI megaforce that we're talking about, this has to be an accelerator.
But will this be the pin that, in a way bursts the bubble? And coming on the tariff threat, right? We keep hearing headlines coming out of Trump, including yesterday. So what's your view on that?
Okay, well, I think on the first point, pin that bursts the bubble, that's not our expectation for the reasons I mentioned. Indeed, you see the reaction in the US markets yesterday, a large kind of unwind of some of the stuff that happened the day before. Moving to tariffs, I mean, in some ways we're making the same point that we need to really sort of sort through what do we know relative to the noise. And I think here, what do we know? We know that if the tariffs are comparatively targeted in certain ways, that's got a much less broader economic impact than if they are broad brush. And we're still going to be learning exactly what's going to be the case. And I think the starting point here would be that, there's a lot in the price already to some degree. We've talked about, I think you talked about earlier on the show, the idea of sort of some trouble, outflows from foreign investors with regards to Indian stocks. So some of that's in the price already. And I think, again, we still don't know exactly what's going to occur. The broader point, I think, on tariffs, again, if we zoom out and look at the bigger global picture, macro policy is much more uncertain now than for a generation. And I think that is really impactful in terms of the sort of volatility we're likely to see. For a generation, we saw macro policy effectively dampen volatility. It kind of acted counter-cyclically. I don't think that's the case now. The election of the US president, and it's not just the US president, more broadly, you've seen incumbents everywhere get a bloody nose from the idea of changing of the guard or a surprise in election results. There's mandates for change, which means that macro policy more broadly can add to volatility going forward.
All right, Vivek, good to have you in the studio. Tell us, where does India come in the scheme of things? Till a long time back, we were talking about India standing out from the emerging market basket. Growth is there, earnings is there. Suddenly that narrative seems to have taken a turn. What's your view on India post the recent correction, and also given the kind of selling we have had from the FIIs? Yeah,
so I think it's really important to kind of distinguish between the cyclical and the structural when it comes to India. There are cyclical dynamics that we've talked about here that I think, the idea of the kind of growth slowing down, etc. You can understand to some degree the tariff uncertainty, why there has been some of that outflow. But the structural picture remains strong. And to give you the kind of the bottom line here, when we're building longer run portfolios, we'd advocate an above benchmark weight, particularly given some of the correction that we've seen. The demographics megaforce that's transforming the economy, that's a huge advantage for India relative to many other countries, right? The idea that the working age population in this country will increase relative to almost everywhere else where it's going to decrease. And so I think when we're looking ahead, we've got to distinguish between the cyclical and the structural. The structural, I think, remains strong. So anyone with a longer holding period, these are the sort of times to kind of get involved.
All right, and we haven't spoken about this for a while, but India versus China, the Chinese market is very, very, very cheap. Suddenly they're making signs that maybe their economy will come out of the trough that we've seen. Between India and China, which side would you lean to?
Well, again, I think the nature of the uncertainty around tariffs, etc., is going to be hard, right? I mean, the point we've been making for a long period of time is this is an environment whereby there's sort of greater geopolitical sort of dispersion, and in that environment, so where the US is pulling in one direction, China's pulling one direction, the opportunities for a country like India seem pretty sizable given the points I just made around demographics as well. So I think there is a case here that, from today, what we're talking about in terms of structural opportunities, we're talking more about the Indian structural opportunities than the Chinese now.
Super.
All right, Vivek, we'll leave it there. Thank you very much for joining us.
Thank
and
you.
Hope this is the first of many chats, many conversations.
Thank you so much.
Thank you. Well, that's Vivek at BlackRock Investment Institute with his perspective on markets and some of the most important hot button issues out there.